Greetings, coin hoarders. You have arrived at Coins Alert, the place you should go to get all your crypto needs met. We demystify the complex world of cryptocurrencies and cut through the lingo to make it easier to understand. For what do we strive? In order to assist you in navigating this new era of digital currency. Let us know what you think by subscribing, liking, and commenting below if you're just as thrilled about this trip as we are. Thank you for contacting us through email. Settle in, because we're about to dive into the fascinating topic of the day. In other cryptocurrency news, Rep. Don Beyer has proposed legislation to establish rules for digital assets and to clarify that the Federal Reserve can print digital currency. What we have here is a measure called the Digital Asset Market Structure and Investor Protection Act. Legalizing and regulating digital assets has taken a giant leap forward with this. The SEC is attempting to gain control of digital assets, promote innovation, and safeguard consumers with this measure. How will this impact XRP and other cryptocurrency assets? A lot might be at stake. A digital US dollar might be printed by the Federal Reserve under the proposed measure. The separation of digital assets from more traditional financial systems may become more blurred as a result of this change. Our perspective on money may shift as a result of this. Someone could wonder what this implies for XRP. What matters most is that XRP is a digital product, which means it has the potential to significantly alter the financial landscape. More individuals might be willing to accept and utilize digital assets like XRP if the Federal Reserve created a digital dollar. However, we must not become overly optimistic. Never forget that this is merely a proposal and not a final agreement. Numerous factors influence this, and digital assets undergo continuous evolution. However, progress is being made as this measure has been introduced. Authorities and banks are investigating potential integration strategies for digital assets into the existing financial system due to their high potential. Potentially significant for XRP and other cryptocurrencies is the blurring of boundaries between digital assets and conventional banking systems. Many are confused about the SEC's stance on digital assets when it comes to regulations. In the ever-evolving cryptocurrency market, the Securities and Exchange Commission (SEC) has found it challenging to maintain pace. They have, however, made everything more perplexing than obvious with their strategy, which is riddled with contradictions and inconsistencies. Case in point, the litigation surrounding Ripple's sale of the digital asset XRP. The sale of these assets was deemed to be a sale of securities by the SEC, which raises numerous regulatory concerns. Because of this move, a lawsuit has arisen demonstrating that the SEC's stance on digital assets is inconsistent. In one instance, exec workers discussed their views on cryptocurrency for personal use alone, rather than as an investment. But what they did subsequent to uttering these words was something new, casting doubt on the regulatory position and causing people to lose faith in it. Everyone, not just the firms involved in the legal battle, suffers from that type of ambiguity. It has far-reaching consequences for the cryptocurrency market and the faith of investors. It isn't often obvious how a security differs from a currency, which is a major issue for those looking to trade digital assets. Because of the fear it inspires, individuals may be less likely to invest or think of innovative solutions. And on the other hand, the broader financial landscape is impacted by this haziness. If traditional banks or fintech businesses are interested in getting into cryptocurrency, there are currently no regulations to follow. There is regulatory uncertainty everywhere. They are left to navigate a bewildering and frequently contradictory labyrinth of comments and decisions in the absence of clear guidelines. It is critical to clarify regulations regarding digital assets, and we will be closely monitoring this. The regulations that govern digital assets should be flexible enough to accommodate their ever-evolving nature. The promise of this promising new field of finance can only be realized with transparent, uniform, and equitable regulations. Many people in the cryptocurrency community are talking about the market overall because of the most recent rate hike by the Federal Reserve. Keep in mind that the Federal Reserve's actions can significantly impact high-risk assets such as cryptocurrency. The decision to increase the federal funds rate by 25 basis points by the Fed makes it quite evident that monetary policy is becoming tighter. Borrowing money becomes more expensive as a result of this change, which can dampen investment and expenditure. This may have you wondering what the future holds for Bitcoin and similar cryptocurrencies. It's true that many people think cryptocurrency is a good hedge against inflation. Inflation is the primary target of rate hikes of the Federal Reserve. In principle, this might make Bitcoin a more attractive investment option. However, in practice, things often turn out differently. Rate hikes might cause market volatility since their effects are difficult to predict. The worth of virtual money may shift as a result of such a shift. If investors begin to dump potentially volatile assets like cryptocurrencies in favor of more stable, conventional ones, the price of Bitcoin might fall. Conversely, the price of digital currencies may increase if investors perceive the rate hike as an indication of a robust economy, which might lead to a greater confidence in riskier assets. Bear in mind that this is just one of many crucial considerations. The current dispute involving Ripple, a number of factors, including regulatory uncertainty, Bitcoin ETF ambitions, and the impending halving of Bitcoin in April 2024, could influence Bitcoin's future trajectory. The impact of the Fed's actions on the cryptocurrency market is still unclear. This is a tricky issue, and developments here could significantly affect the value of digital commodities. The story, though, is not complete. Two major developments to monitor are the Ripple case and the impending Bitcoin halving. Now, let's investigate these. We have the Ripple case to begin with. The cryptocurrency community has been talking about it since December 2020, when the SEC filed it. According to the SEC, XRP's parent company, Ripple, unregistered offered securities worth more than $1.3 billion. The price of XRP has fallen significantly due to the case's impact on the crypto community. It is possible that XRP's market position will be strengthened or diminished depending on the outcome of this litigation. Worldwide, investors are glued to their screens waiting for this high-stakes game to end. Now we may go on to discussing Bitcoin's other half. When this occurs in April 2024, it will most certainly have an impact on the cryptocurrency market. Now you know. With the halving of Bitcoin, the reward for creating new blocks is now half what it was before. There will be fewer Bitcoins added to circulation as a result of this. In the past, when the quantity of Bitcoin drops, more people desire to buy it, which drives up its price. Rest assured, it's about more than just Bitcoin. As a whole, the cryptocurrency market is impacted by the split. This incident could have a ripple effect, if you will, on the pricing of other cryptocurrencies, including XRP. Both the Ripple case and the Bitcoin split are more than just headlines. Their actions can sway market sentiment and significantly affect the trajectory of the cryptocurrency market. In 2024, these are the major events that should not be missed. What happens as a result of these occurrences may shake up the cryptocurrency industry. You can count on us to be by your side as you navigate these events, which have the potential to significantly impact the crypto industry. If the US Federal Reserve intends to utilize XRP, what does this imply for the cryptocurrency? Now that we've covered the evolution of cryptocurrencies, let's dive into what XRP is capable of. First, let's examine the fundamentals. The digital asset in cryptocurrency known as XRP was created by a software company named Ripple Labs, Inc. This company is an expert in the field of real-time gross settlement, a rate of exchange, and a system for transferring funds. Aiming to facilitate safer and quicker cross-border transactions, XRP was born. Numerous global financial institutions have taken notice of this unique attribute. The possibility that the US Federal Reserve could employ XRP is actually not as far-fetched as it initially appears. The Federal Reserve has discussed the possibility of a digital dollar, and XRP may play a significant role in this. Since it's quick and doesn't drain your battery too much, with XRP there may be a more efficient method of sending money internationally. With its potential to act as a bridge currency, it might facilitate the exchange of fiat currencies. Although this potential application is not without its issues, Ripple and the SEC are now embroiled in a significant case. Beyond that, the SEC has stated that XRP ought to have been classified as a security. Meanwhile, Ripple claims that XRP is a form of currency. The lawsuit's outcome may significantly impact XRP's trajectory and, consequently, the likelihood of its adoption by the Federal Reserve. Assume